Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Wednesday, the 18th of December. Starting off with Argos Resources, where we see this breakout out of this triangle. Normally at 3.25 pence, at the end of the close above this should give us a fresh target to the upside. Nominally up towards this line of resistance of 4.5 pence from way back in March. Stop loss on the idea probably back below the 200-day moving average of 2.83 pence. On to one of the collapses of the day, a former hero, I suppose, for many in the market. And just worth looking at the Bidstack chart in the sense that we had the warning, I suppose the first warning that things weren't going well with the loss of the 50-day moving average back in August around the 25 to 30 pence level. The shares made many attempts to clear the 50-day line or sustain that and weren't able to do that in towards the end of August, early September. Then the second warning really was the loss of the 200-day moving average around 20 pence at the end of October. I believe that coincided with some direct share sales, but I'm not quite sure. Then we had the second test of the 200-day line as resistance, and that failure in November around 22 pence led to the current collapse. I suppose the only positive at the moment is that the 200-day line is still rising at 22 pence. I suppose that would suggest that we'll, after testing the 5 pence area, which is the low of the past year, there could be a rebound to fill up the gap that we've had overnight today back towards 10 pence. But obviously, overall, not a great chart, and most of it was sort of written in the technicals in recent months. Going on to Futura Medical, which is similarly had a rather nasty fate. You can see here that it is back to, has bounced off initial 2019 support at 10 pence. In fact, there was a double bear trap below that level. So it suggests that there could be a little bit more upside towards 15 or 16 pence after the massive gap to the downside. But again, a stock where the loss of the 50-day line and then the 200-day moving average were the signs that things were or could have gone wrong with that situation, and they certainly did. Itaconix is next, a rather more bullish situation. Here we've got a breakout, second breakout. We had a falling wedge breakout through the 2 pence area that took the shares to just over 3. Now we've got a break of the 50-day moving average at 1.56, which could take the shares back towards the 2.25 pence level, maybe a bit more actually, but the main 3 pence resistance area over the next few weeks. Stop loss obviously back below 1.5. Bit of a buzz on Twitter regarding the next stock, Marechale Capital. Shares a bit flaky in terms of the intraday spikes and everything else, but still the message is that while we're above the 50-day moving average and also this resistance line from August last year, the upside here could be towards 1.5 or 2 pence over the next few weeks or month or two. On to a stock which I know a lot of people are willing higher, comes in the form of Oracle Power. Did talk about the all-important 0.94 peak from February. That's become a bit of a trading zone now. We had a little pullback below it today. It's currently above it, but this is the area that needs to hold. Can't rule out a final clean out to 0.7 pence, which was resistance on the way up. That could become new support, but at least while above 0.7, there is a chance of at least a partial retest of the best levels of late back to 1.8 pence. Finishing off with a stock I haven't looked at for quite a while, but looks as though it's finally ready to rehabilitate itself. Comes in the form of Tern. Here we've got a falling wedge breakout at 9 pence. While we're above that, looking to at least fill that gap towards 12.5 from October, and as a best case scenario up to 16 pence, which is a May resistance line projection. Be cautious on the shares, maybe wait for an end of day close above either the 50-day or 200-day moving average, the latter at 10.25 pence, before assuming the shares are on their way. But it does look as though that 9 pence level was the trigger level, at least for a near-term move. That's it from me. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.